Kristen King, and you're watching Smart Money, the show that gives you the inside edge on the bets that the movers and shakers on Wall Street are placing. This week, we are looking at what we might term an old-fashioned conglomerate business. It's effectively a holding company that owns or has substantial interests in a variety of businesses across a wide range of industries. Industrial conglomerates like this are something of a rarity these days, and that's what makes Steel Partner Holdings so interesting. The company trades under the ticker SPLP and is listed on the New York Stock Exchange with a market cap of $341.3 million and operates in the diversified industrial, energy, and financial service sectors. In its industrial division, it has business in coatings, laminates, and films, as well as the production of specialist steel and nickel pipes, impact-resistant fabrics, fasteners, and metal joinery. It also produces transformers and power conversion equipment. In the energy space, the company provides well servicing and workovers to the oil and gas industries, while its financial service business, WebBank, provides private label bank cards and financing services. Steel Partners also have interests in data-driven marketing, supply chain solutions, both online and physical, as well as aerospace and microwave networking. These diverse interests make the business quite hard to pigeonhole, but they also give it a unique identity. Steel Partners reported third-quarter earnings back in November 2020, and in Q3 generated $38.3 million in net income from revenues of $330 million. And though the business was definitely still feeling the effects of the economic downturn brought about by the pandemic, it was reducing costs and improving cash flow as the year progressed, to the extent that it felt able to pay a dividend to shareholders at the end of November. Steel Partners is due to release its Q4 2020 earnings on February 26th. All in all, then, the company sounds like a business that's in recovery mode, particularly within its energy and industrial divisions. That recovery potential seems to have whetted the appetite of an insider in the business. Steel Partner is managed by what's known as a general partner. In this case, that's Steel Holdings Partners GP Inc., who employ Mr. Gordon Walker as Senior Vice President with responsibility for many of the Steel Partners' industrial businesses. As such, Mr. Walker will have a clear insight into how those businesses are performing. So it's interesting to note then that Mr. Walker has been buying Steel Partners stock in recent weeks. In fact, he has made 4 separate purchases totaling just under 80,000 shares. In total, he spent $977,607 at an average price of just a fraction under $12.23 per share. Steel Partners' stock price has been in recovery mode recently and is up more than 23.5% over the last week, nearly 50% in the last month, and 136% over the last 3 months. The shares currently trade around $13.50, but their 3-year high is up at $20.70. The stock came close to its 2-year high of $14.33 when it printed at $14.10 on January 19th this year. That was one of 5 near-term highs the price has made in the last month. Those levels give us something to watch closely in the run-up to the Q4 earnings at the end of February. But in the interim, it will be interesting to see how President Biden's plans to reflate the economy might affect the prices of industrial holding companies such as Steel Partners. That's all we have time for today. To find out more about our Trackstar IQ data, sign up to our free newsletter at investingchannel.com. Small and micro-cap stocks can be high-risk investments, so before you make any decisions, please ensure you do your own due diligence.